our wealthy legislators with ties to banking and large corporations are asking us to pay for budget deficits by attacking collective bargaining, college tuition aid, health care for the poor, and pay for the troops, other services for middle-class Americans, all while continually advocating massive tax cuts for the wealthy and bailing out failed banks and large corporations. Multinational corporations dodge corporate income tax by shifting the majority of profits overseas. Google saved $3.1 billion in taxes over 3 years by shifting foreign profits to Ireland, the Netherlands, and Bermuda. It has been estimated that the U.S. loses $60 billion to $90 billion per year in federal tax revenue due to these scams. Our legislators want to give breaks and tax holidays to these companies in order to entice them to bring some of their profits back to the U.S. But historically, that has led to little job creation, with the bulk of the money used to buy back stocks. In the 1980s, the Grace Commission was formed to identify and remedy government waste. The report said this about the income tax. With 2/3 of everyone's personal income tax wasted or not collected, 100% of what is collected is absorbed solely by interest on the federal debt and by federal government contributions to transfer payments. In other words, all individual income tax revenues are gone before one nickel is spent on the services which taxpayers expect from their government. That means that on average, 35% of your yearly earnings are taken by the government to pay on its debt to the Federal Reserve, a privately owned bank with little regulation from the government. Now I'd like to speak on the legality of the legislation used to collect the federal personal income tax. Please know that it is dangerous to stand up for your rights while the IRS is still in existence. While the IRS code doesn't define income, the Supreme Court ruled on the constitutional definition in Doyle versus Mitchell, where they ruled that income equals corporate gains. And I quote, "Whatever difficulty there may be about a precise and scientific definition of income, it imports as used here something entirely distinct from principal or capital, either as subject of taxation or as a measure of the tax, conveying rather the idea or gain or increase arising from corporate activities. As was said in Stratton's Independence versus Halbert, income may be defined as the gain derived from capital, from labor, or from both combined." The gain is not derived by an employee earning a wage in exchange for labor. It is a mutually agreed upon exchange like bartering. It's an easement exchange of private property. The Supreme Court ruled in Coppedge versus Kansas, the principle is fundamental and vital. Included in the right of personal liberty and the right of private property, partaking of the nature of each, is the right to make contracts for the acquisition of property. Chief among such contracts is that of personal employment, by which labor and other services are exchanged for money or other forms of property. If this right be struck down or arbitrarily interfered with, there is a substantial impairment of liberty in the long-established constitutional sense. This right is essential to the laborer as to the capitalist, to the poor as to the rich, for the vast majority of persons have no other honest way to begin to acquire property save by working for money. The Supreme Court rejected claims that the 16th Amendment changed the constitutional limits on direct tax. In Brushaver versus Union Pacific Railroad Company, they ruled that it created no new power of taxation, that it did not change the constitutional limitations which forbid any direct taxation of individuals. They made clear in many rulings that to preserve the rights of individuals and protect them from a direct tax as outlined in the Constitution is very important and has not been altered by the 16th Amendment. The Supreme Court ruled that the constitutional definition of income is not a gain derived from is a gain derived from corporate activity. They ruled that the 16th Amendment gave the government no new powers of taxation. The Supreme Court ruled that a wage earned in exchange for labor is a trade of private property and not defined as income. All of these things make the 16th Amendment to the Constitution illegal. In 1894, Congress passed the 1894 Income Tax Act. Section 27 of this act read, "There shall be assessed, levied, collected, and paid annually upon the gains, profits, and incomes received in the preceding calendar year by every citizen of the United States, whether residing at home or abroad, and every person residing therein, whether said gains, profits, or income be derived from any kind of property, rents, interest, dividends, or salaries, or from any profession, trade, employment, or vocation carried on in the United States or elsewhere, from any other source whatever, a tax of 2% on the amount so derived, over and above $4,000, and like tax shall be levied, collected, and paid annually upon the gains, profit, and income from all property owned and every business, trade, or profession carried on in the United States by persons residing without the United States." This was constitutional originally challenged as a direct tax that wasn't apportioned. The U.S. Supreme Court in Pollux versus Farmers Loan and Trust Company, the majority held that it was a violation of the Constitution. In 1909, President Taft called a special session of Congress and asked Congress to overcome the Pollock decision and pass a constitutional amendment. This amendment read, "The Congress shall have the power to lay and collect taxes on incomes from whatever source derived, without apportionment among the several states and without regard to any census or enumeration." The proposed amendment was sent to the governors of the then 48 states, who then submitted the proposed amendments to their state's legislative body. The state legislators acted upon the proposed amendment. 42 states sent certificates of ratification through their governors to the Secretary of State, Philander Knox. Connecticut, New Hampshire, Rhode Island, and Utah rejected the amendment. Florida, West Virginia, Vermont, Massachusetts, and Pennsylvania did not submit certificates of ratification. At that time, Congress had passed Section 205 of the revised statutes, which read, "Whenever official notice is received at the Department of State that any amendment proposed to the Constitution of the United States has been adopted, according to the provisions of the Constitution, the Secretary of State shall forthwith cause the amendment to be published in the newspapers, authorized to promulgate the laws with its certificate."
No, I mean, people don't really know what's in the Constitution.
And the same has become valid to all intents and purposes a part of the Constitution of the United States. Secretary of Knox noticed that the vast majority of certificates of ratification contained language different than that in the amendment proposed by Congress. He asked the Office of the Solicitor of the United States for a legal opinion on whether he could certify it as ratified. On February 15th, 1913, the solicitor sent a memorandum to Knox. Part of this memorandum read, "In no case has any legislator signified in any way its deliberate intention to change the wording of the proposed amendment. The errors appear in most cases to have been merely typographical and incident to an attempt to make for accurate quotation. Furthermore, under the provisions of the Constitution, the legislature is not authorized to alter in any way the amendment proposed by Congress. The function of the legislature consisting merely to the right to approve or disapprove the proposed amendment. It therefore seems a necessary presumption, in the absence of an express stipulation to the contrary, that a legislature did not intend to do something that it had not the power to do, but rather that it intended to do something that it had the power to do, namely where its action has been affirmative to ratify the amendment proposed by Congress. Moreover, it could be presumed that by a mere change of wording, probably inadvertent, the legislature had intended to reject the amendment as proposed by Congress, where all parts of the resolution, either than those merely reciting the proposed amendment, had set forth an affirmative action by the legislature. The authority usually cited for the criticality of ratifications without errors of capitalization, spelling, or punctuation is document number 97-120 of the 97th Congress First Session, entitled "How Our Laws Are Made" by Edward F. Willett, Jr., Esquire, of the Law Revision Council, U.S. House of Representatives. It dictates that exact spelling and punctuation are extremely important. It states that the bill must be agreed to in identical form. In his report to Knox, the solicitor recognized many defects of wording, spelling, capitalization, and punctuation, but he seemed ignorant of constitutional and procedural defects at the state level. He pointed out similar defects in the ratification of the 14th and 15th Amendment. Knox had plenty of clues to problems with the ratifications, enough so as to require further investigations. Article 5 of the Constitution specifies the ratification process and requires 3/4 of the states to ratify any amendment proposed by Congress. In 1913, there were 48 states in the Union, so 36 states were required for ratification. 33 states engaged in unauthorized activity of amending the language of the proposed amendment, a power not granted to the states. Failure of 13 states to ratify would doom the amendment. Oklahoma, Missouri, and Washington intentionally amended the language proposed by Congress, committing a violation of the Constitution recognized by the Solicitor of the United States. The Oklahoma Senate amended the language to have the precisely opposite meaning. The Kentucky Senate vote was reported incorrect and backwards. The actual vote was 22 opposed and 9 in favor. Minnesota sent nothing to the Secretary of State. The California Legislative Assembly never recorded any vote upon any proposal to adopt the amendment proposed by Congress. A list of alleged defects in the ratification of the Income Tax Amendment include that they were not ratified by the state legislature and so reported, occurred in 7 states. Not ratified by state legislature, but reported as ratified, occurred in 3 states. Missing or incomplete evidence of ratification, but reported as ratified, occurred in 9 states. Failure of the governor or other official to sign, although required by the state constitution, occurred in 6 states. Other violations of state constitution in the ratification process, 25 states. Other procedural irregularity making ratification doubtful, 29 states. Approval but with change in wording accepted as ratification of the original, 22 states. Approval but with change in spelling accepted as ratification of the original, 31 states. Approval with change in punctuation accepted as ratification of the original, 27 states. 17 states have defects from the first 3 of the list, which would be fatal to the amendment. Ignoring the defects of spelling, capitalization, and punctuation, only 2 states successfully ratified the amendment. But Secretary Knox issued a proclamation in which he declared the amendment to be in effect February 25, 1913. It's the only record of the 16th Amendment having been confirmed. In these defects, I have counted Ohio as a state, even though it was not admitted to the Union until 1953, retroactively, which is ex post facto and unconstitutional. Clause 3 of Article 1, Section 9 of the U.S. Constitution prohibits the federal government from passing ex post facto laws, and states are prohibited from the same by Clause 1, Article 1, Section 10. We must inquire into this matter further and demand corrective action. For more than 80 years, an unconstitutional law has robbed the citizens of the United States of the right to the free exchange of their labor for a wage. We must endeavor to be free from this direct tax from which we are meant to be protected by the Constitution and which was never legally ratified by rule of law. We must work together to repeal this unjust, crippling, and illegal legislation. Thank you.